Hi, everyone. I'm Denise Garth, Chief Strategy Officer at Majesco, and you're listening to the Future of Insurance Industry Leaders podcast series. Follow along as I interview the best and brightest leaders in the insurance industry and insurtech landscape to bring you the latest in digital transformation, innovation, industry trends, challenges, and opportunities, as well as next-gen technologies. We use our experience to anticipate what's next without losing sight of what's now. Stay tuned to find out your next now. Welcome, everybody, to today's podcast episode for the Future of Insurance with Majesco. I am thrilled today to have Matt LuBien, the president of K2 Insurance Services, one of our customers, joining me today. Matt, I know we're going to have fun just like we did on the panel, so welcome.
Thank you for having me, Denise. Looking forward to chatting. Hopefully I get a couple laughs out of you, but thanks for the invite.
You're welcome. If you could just give a little bit of background about yourself, K2 and our partnership, just give a grounding for people. I always think that everybody knows everybody, but I find out that some people don't know everybody.
Lucky for me that there's plenty of people that don't know me, so that's a good thing. I've been at K2 for, just over 12 years now. Before that, I was at another program administrator, Arrowhead General Insurance Agency, for 22 years. So I've been in the business for longer than I look. So 34 years, I like to think. K2 was formed in 2011, so I joined a little bit after K2 was formed. Today, K2 is, a group of 35, maybe up to 40 programs these days in terms of MGAs that we run and operate. We have a claims adjusting company. We have two independent appraisal firms. We've got a loss run pro business, so we do some technology ourselves. So pretty full suite of offerings in the program space. We've got over 600 employees, and we'll do about $2 billion of premium this year. So in a short span of time, we've actually turned into what we like to think is a real company.
You definitely are a real company. I think we've had a partnership with K2 for quite a few of those years since the startup too, correct, Matt?
That is correct. You guys were pretty much the initial, I'll call it, broad platform that we developed in partnership
Yep.
for our personal property business. So today, kind of what we do with you guys is we'll write this year just somewhere between 450 and $500 million of personal property premium. That is a countrywide effort. It spans multiple products. It allows us to transact with approximately 35,000 different independent agent partners that access the platform every day. And I checked before the call. I think we kind of hit a milestone on our side. I think we just got over 350,000 in-force policies, somewhere around there. And we do claims as well out of that platform.
Yeah.
So for us, it's a complete end-to-end submission, the old quote bind issue, the whole shoot and match. So it's been good for us. We've partnered with you guys for, gosh, about 11 years now. So it was about a little bit after I joined that we kind of started the journey, and we're still on it.
That's right. Program business and MGAs are one of the hottest areas of growth and investment in the market. What are the 2 to 3 key takeaways that has been crucial for your success that you can share with others that might be thinking of a startup?
That's a loaded question because I don't want to give away our secret sauce.
Don't
But
give away your secret sauce.
I'm just kidding. The things that are crucial are you kind of have to have a couple things. One, you've got to have what we think is a unique offering in the marketplace. And the way that we facilitate that today is, we partner with what we like to think of are the most entrepreneurial underwriters in the business. So when we look at our teams, from the leadership of a given MGA down to producing underwriters, servicing folks, everybody that's involved, they
Yep.
really are taking what we think is a unique approach to a problem in the marketplace. And they've got a track record of success. So I think that's a key fundamental thing that you have to have. And I think secondary to that, but equally as important, I shouldn't say secondary, but equally as important is you have to have a carrier partner in our situation, or carrier partners that have a similar view of that particular program and market dynamic and are willing to engage in a long-term partnership. That's something that we're really proud of as well, is that we've been very fortunate that we've produced good underwriting results. We have a great panel of carriers. We trade with over 70 carriers today. And what we offer them is this ability to find the product sets and where they want to deploy their capital, match them up with underwriting talent. And those are really the 2 key ingredients, right? Getting great underwriting talent and getting great carrier partners. And if you can have those, what we do at K2 then is we try to help facilitate the blocking and tackling and the business portion of that with folks like yourself, right? How do we find the appropriate platforms that support those business cases and deploy it quickly. And so that's kind of for us, that's really the secret sauce.
Program business, and as you talked about it, these niche areas in the market with different risk needs and specialized needs, needing products. That focus on products is really one of the foundational elements. Where have you seen over the last couple of years around, introduction of new products to drive some growth? And what are some examples of that success that you guys have done that is, readily available for anybody to see?
The one that is most apparent today that we see, and it's one that you guys help us with, full disclosure for the folks listening, and it's not just an ad, it's a true statement, is we've had tremendous growth in our California property business. What we do there is, and what all MGAs that are good do, is they're able to provide a solution in distressed markets. And I can't think of a property market that's
Oh,
much more distressed than California. Being a resident here, I thank my lucky stars every time I get a renewal on my homeowner's policy, but it's a very distressed market, right? And so what we've been able to do, kind of to my earlier comment, is we've partnered up with multiple carriers. We have what we think is a relatively unique product set that we offer to the market. We have a great distribution network and the producers and the agencies that we work with, and we think we outperform on the claims when events happen. And so that is an example of a marketplace and a kind of a microcosm of things that where we grow are successful. And we see similar opportunities in other product lines. We have a budding parametric product. We think we are the best parametric underwriter in the business. That's a growth area because it's a little bit of a green field, but everybody's approaching it sort of in their own unique way. We like to think ours is the best and that we've partnered with the best underwriter and the best carriers, but that's an area of growth. And another one that we're trying to really grow in this year is, we launched a cyber product, group of products with our cyber group. Similarly, right, that's a market that's evolving. It was really kind of like the thing people were talking about for a period of time. I think the market has gotten smarter about how to approach it, how to price it, what the appropriate coverages are, and what the different needs are of that market. And I think that's really become segmented. And that's where our team has done a really good job about how do we want to target specific segments of that market and what's the value proposition we can kind of bring to those. So those are a couple of examples, and we see that in almost all of our businesses. If I had days, I could run you through each one of our units. And I think the unique thing about them is we like to tell people they're not vanilla, they're not Main Street type things. What we do is definitely stuff that's on the niche, specialty oriented. Every MGA says that, but we believe it. That's what we're really good at. And that's what we try and bring to the market as a creative solution.
but when you think about that, Matt, you guys are doing $2 billion in DWP a year. That highlights that the mainstream products don't always meet the risk needs out in the marketplace, and that there is such a need for these personalized niche types of products to meet the kind of risk that they have. So you mentioned parametric. One of the things I wanted to get your perspective on is opportunities for growth and innovation tied to it. And I think parametric is one of those. I think gig is one of those. Embedded is one of those. Moving more into telemetric types of products. What do you see as some of those areas over the next 2 to 3 years for innovation? And how is that going to be different in really helping to meet the needs of customers in the marketplace that, to your point, are underserved or under insured because they can't get access or they don't have the type of products they can afford?
Yeah, no, it's a great question. When I think about it, and you mentioned telematics, right? And that's one that we've used in a couple of our different units. I would say not as successfully as we would like, or probably some other large companies have proven to be good at. But I think overall the market hasn't really, to my opinion, when I'm thinking about in particular what we do on some of our commercial transportation business and some of our
Mhm.
delivery related business, the answer to folks on how you combat escalating costs, right, was, hey, we're going to use this technology and telematics. It's going to allow us to identify better drivers, or it's going to allow us to coach drivers, and we're going to make these risks better on the underwriting and the exposure side because costs from a premium pricing perspective were just getting out of control for some of these businesses. And you were pushing it down to the point that those businesses were not able to afford their insurance coverage. You always kind of heard back that you were putting people out of business because of that. What I think is going to happen is as technology improves, you're going to see one of two things. Either things like telematics are going to improve so that it becomes cheaper and easier for people to deploy into their underwriting process in the market. Because today, it's still a challenge for us, especially as an MGA. I'll cry poor mouth here a little bit, and every carrier will say you're crazy. but we live on a fixed margin, right? Between the
Yep.
commission we receive from a carrier to do all the services and what we're doing on an acquisition cost for our retailers and wholesalers, it's not a huge number. And so when we are trying to deliver a better result to our carriers and we're making investments in technology and underwriting tools, that comes directly out of our pocket. And telematics and things of that nature have been, I think, moved the needle a little bit, but not as proportionate to what the cost is for somebody like us to implement it. So we get hesitant about that. So I think that's a long-winded answer to your question about, I think I'm kind of hopeful that those technologies will become more embedded in the actual risk themselves, and you get more buy-in from risk managers and from the actual customers, the end customers. And the infrastructure is developed to allow us to deploy those technologies faster and incorporate it into that underwriting and pricing process. But I don't think anybody has 100% solved that yet. So I think the future really is, how does technology help facilitate
Yeah.
that? And I think part of what that requires is going to require somebody like us or like carriers that deploy it to take that information and data that they have in their own platforms, right? So like what we would have with you guys on a
Yep.
premium and a loss basis, how do you wrap that and fold that into some sort of modeling or pricing tool that's more effective, more granular, and faster to match up and marry up with that technology so that you're delivering, and I think I said this when we were together last, how do you deliver usable information to your underwriters
Yes.
at the point that they're quoting a risk for whether it's new business or renewal? And everybody kind of or hampers and harps on one data point and one technology that's going to solve everything. And I don't buy into that. What we believe is that technology can enable better data sets to be presented to underwriters in a usable fashion upfront and sooner, because the underwriters still know the risk best. They know the production sources best. They know what that regional impact is. But what we should be striving to do is to supplement that. And how do you deliver better information to those underwriters? And I think that's, to your point, I think that's where the future
Yeah.
goes. And it goes with some of these new products. So people are either developing things like parametric products to do that because they're identifying certain key indicators that are
Yep.
correlated to those risks and they know how to price it. But that requires data back, or on the telematics side, something similar. So I probably got lost on my answer, but I get excited about it. But that's kind of where we see that transition happening. And it kind of ties to, I think the spectrum of everything that we see overall, right? I think right now today you see just a lot of speed being
Hmm.
implemented into the market. And you and I have been in the business for a while. The speed with which these things are coming to bear and being deployed into the market and the requirement for that has just increased over time. And technology enables that, but it doesn't change that primary premise, which is you delivering some information back to an underwriter that's going to
Hmm.
allow them to make a better decision. I still believe that's what's going to keep underwriters in business, and good ones win and bad ones don't, is what all we're trying to do is help them with the technology to do
Especially
it
in these
faster.
kind of niche, specialized, complex areas, everything's not the same.
Yeah, 100%. It's not the same. And that's especially in our world, right? If you were
Hmm.
Progressive or, State Farm or
Yep.
Allstate or whatever, and you're going to go out and write billions of dollars of personal auto, I could buy into
Yep.
automated, non-human underwriting, and it's all data driven, and,
Yep.
and Flo can do her thing. And they do it really, really well because they're great at crunching data and numbers, and they have a really expansive box with which to do that from a pricing perspective. And they've got tons of data, and good for them. They're able to do that. You cannot apply that same logic, in my opinion, to some of, to your point, these
Yep.
very targeted niche specific risks, because it still takes an underwriter to understand what those risks are. All we're trying to do, I think, collectively, ourselves and you, is how do you take it from the traditional 4 or 5 data points that underwriter might have had, and they're going out
Hmm.
and they're manually grabbing it, and how do you expand that exponentially, but deliver back meaningful data and not just noise, meaningful data
Exactly.
for that underwriter to use.
Selecting, obviously, when you guys were starting out the business and really creating a foundation, both from your business model perspective with your different business units, but also selecting technology foundation. It's really more than just features and functions out there. It was really, how were you going to find the right partner in the technology that was really going to empower and enable you guys? What did you guys look for? What would you give as a recommendation to others looking for that?
Yeah, I think it's a great question. We've looked at a lot of platforms in my time here, and we manage and utilize a couple that are different for line of business, right? So I think the
Yep.
The thing that I tend to tell people is we're biased. We like platforms that have experience in a line of business. We've
Mhm.
struggled when we've had to teach people something new because your development pattern and a time frame to do that takes longer. I think the folks that in your business have gotten much better at being able to take business requirements and go out and develop some platforms, but it definitely accelerates the process if you're already speaking the same language, you're understanding the same product, and there is such variance in product, right? To your point, we encounter this all the time between what we do on a personal lines basis, all the variations we do on commercial lines, and then some of these really nichey specialized things that people have
Mhm.
just never done before, so they don't really
Right.
know, and you're trying to take common insurance technology and apply it to something that has never been done before. That's hard. I think one is if you can find a vendor that's got experience in those lines of business. And then
Yep.
I think number two, that's really key from our perspective, where we try and help, and what I would tell people is, and I mentioned it earlier, those business requirements, you have to be really, really clear and provide that information to your vendor in a language they're going to understand. That's one of the things that in my career we've had to learn is it's worth the investment. A lot of MGAs, a lot of carriers, they don't want to make the investment in a project manager or a business analyst or whatever you want to call it. They have all these great names now, but we have a team that does that. And I think in particular, in working with you on our product sets, that's helped accelerate that, right? Is
Yep.
that we're able to sort of understand the language, the requirements you and your developers need. And in doing that, we can create and force our underwriters and our business users to provide clear instructions on what they actually need this platform to do. And we actually end up as K2 acting as a translator to some
Mhm.
extent. So I think it's worth the investment to become a translator because otherwise, I think people start talking over their heads and you think you're communicating and you're really not. And that's what slows the process down. That's what creates reworks. That's what creates bugs you didn't anticipate. And you hear about failed implementations, right? Like, oh, they
Mhm.
never got it done. Well, a lot of that, when you really dig into it, is people that are reworking a problem that just wasn't really clearly defined up front or a
Yeah.
process that wasn't defined up front. And
Yeah.
I think if you can do that, I think again, the technology then that exists today and the speed with which folks like you are able to bring these things to bear, it accelerates that, right? So the faster you can give them clear details, the faster they can build things and they can make them more complex as well. And I think for us with your platform, that's kind of a proven case study, right? I mean,
Mhm.
as I think about it right now, we have I'm going to say it's over 100 state product combinations on one platform.
Yep.
That's a lot.
A
And I'd
lot.
love to tell you that they're all the same and we try and get our business people to make them all the same. And they're not. We write personal property across the country. There's different requirements, there's different
Yep.
rules, there's different regs. We make as many things common as we can, but the reality is I always use bad visual analogies because that's the type of person I am, but it's like a giant Rubik's Cube. I mean, it is just
Yeah.
the biggest Rubik's Cube you can think of, and right when you think you got it set, we tend to come to, Majesco and say, oh, hey, by the way, I have a new product in a state I've never been in. I'm going to add another little weird square to this Rubik's Cube and make you guys twist it and turn it around and still get all the colors to line up. That's
Yep.
hard. And you guys do a good job of that. But that's really, I think, the better we can define that square helps you guys think about how do I put it into that matrix. That's kind of how I think about the business. It's clear in my head, but I don't verbalize it well. But that's kind of how I think
I
about
love
it.
that description because in many ways we've gone as an industry from just the general one size fits all. Yeah, we had the regulatory changes to really driving down more what I call almost personalized, whether it's at personalized products based on certain risks and certain characteristics in a geo state or whatever it is. It really helps drive, I think, acceptance of the products, when it's not just a general product for everybody.
Yeah, and I would agree with that. And the real trick of doing that is you have to be able to create that uniqueness, right, in your
Hmm.
product set and what you're trying to do and what you're trying to achieve. Because ultimately, what we're trying to do, right, is we're attempting to find that sweet spot where we're going to minimize the impact of competition for that particular risk. We are going to get the right price and we're going to do it as fast as possible for that underwriter to deliver back to that producing agent,
Yep.
right? And that sounds easy, but when you think about it using the Rubik's Cube analogy, that's really hard because you're twisting all these things at one time. And that's where the technology has to come into play because you're twisting all this Rubik's Cube. And then what the market demands is they demand that fast, and they demand it as a single source of entry, right? And gone are the days when everybody's going to have their own portal and everybody's going to log on and all. That doesn't work, right? And I get that. I understand that. If I was a producing agent and I did that for a little bit in my prior life, yeah, you don't want to go to like 10 different places and 12
No.
different places. And I think that's where you're seeing a lot of advancement, right? Whether
Yep.
it's common platforms where agents are working off of, or that's really one of the things where, right, AI enabled
Yep.
ingestion, it super accelerates that, right?
Yep.
You have to be careful with it because we still want to get valid information but I think it does enable and I think it accelerates the ability of folks like us to capture that information and deliver something back to an agent faster, but it still fits our specific
Yeah.
model, right?
Yep.
And you're not having to hard code all the things. It used to be like we would do this stuff and what's the longest part of the development process? Oh, we got to map all this stuff. I hated that term mapping. Like you were, drawing a bunch of spaghetti lines around everywhere to get all these different data points. Well, now with things like AI enablement, you're going to be able to have something that's going to help you go out, grab that
Mhm.
information, go out to third-party sources or external sources, get the validation that you need back, and maybe enhance that data that you were submitted originally, and bring something back to either your underwriting and pricing model or your underwriter themselves, and be able to say, what do I do with this? And have that technology help with that,
Mhm.
push it back to that broker faster and say, this is what I've been able to accomplish and I've given it to you. And I think that's really the trick, right? Is how fast you can turn that Rubik's Cube. And that's where technology enables that.
So, when we were talking, one of the things I loved your description of this. One of the things you talked about is keeping the mad scientists in the closet. Every company has these. And what you meant by this is keeping the customization at a minimum and not letting the mad scientists out that they think that they've got to have every kind of nuanced customization under the sun that really impacts your ability to get things to market really quickly, but it also impacts your ability to do things in the future. So there's both a short and a long-term value of keeping them kind of in the closet, so to speak. Talk about that and how that's been important for your business.
Yeah, and I'll stick with I'll call it the Rubik's Cube example. And in thinking that through, it's almost like every customization in my mind that could be very well intentioned, right? A user or an
Mhm.
underwriter says, man, I got to have this. And you go, okay, you listen to the business case for it. But in our minds, what we're then trying to think through is that I got to have this is going to add another row or a column. It's going to expand exponentially. Again, that the size of that Rubik's Cube, and it gets it that much more complicated to work with. And that's really what I mean by trying to keep, the mad scientists at bay. A lot of people have got really great ideas and they want to have something that's unique, but they can wander off the path really quickly and they kind of get lost. And
Yep.
what we're trying to do is try and keep them sort of on base, right at the base camp, and keep them out of the box as much as possible to start with. And what we always kind of preach to our teams is we have a pretty well-defined box for all of our different platforms. If you can go out of the box with that and let's see what works in the marketplace, and then we can test and find out, measure what are the things that really are falling outside of that. And then we
Hmm.
can figure out the best way to capture that, because then it kind of goes back to my earlier comment. You can more clearly define for your vendor and your platform provider or your own internal resources that are doing that development what specifically it is you're trying to achieve and what you're trying to do. And a lot of times that then is something that you say, oh, okay, this makes sense. Actually want to make this part of my base. And you might go
Hmm.
back to a vendor and they say, yeah, that's a great idea. We're going to make this part of our base product and offering because we can see the use case for this on all these other things.
Yep.
That's a win. Alternatively, you might say it's only a use case for this one off over here. Let's not include a big change in our base platform, but we have a way today to be able to accommodate that and make it seamless. And we're going to let this thing sit a little bit outside of that Rubik's Cube. It's sort of like a little satellite that's kind of, flying around that Rubik's Cube if it was a planet. And it's only going to fly around for you. And we're going to use it for you and we're going to see what happens, but we can connect it because
Yep.
that's easier today than it used to be. And we can do that. And that also helps you limit it, because then when you go back to that user and using that bad analogy of the Rubik's Cube being a planet
Yeah.
and these one-offs being little moons, you can't have a bunch of moons and satellites rotating around this thing. You got to make sure you pick the ones that are the most critical and important to the majority of your business. And that's really what we try and preach is how do you identify that? Because otherwise, everybody wants everything, especially like, and this is no knock on our retail producers or wholesalers. it's in their nature to ask for everything. And again,
Yep.
they're only working on behalf of their clients, but
Mhm.
they're always going to ask for everything because they
Well,
don't
and I
actually have
think
to
having
do
that,
it.
I think having that core team that you talked about that really manages all of that for your business really helps keep that tight too, doesn't it?
It does. I'd be lying if I said it doesn't create some internal conflicts
Oh,
at
I
times,
bet.
which is all fun. And the nice thing about K2 is we call it a big, it's a very familial relationship. And I always kind of had a dysfunctional family. So our holiday get-togethers and dinners always involved at least two or three arguments at minimum. It was sort of like a minimum quota. That happens for us at K2 as well. We'll have those arguments about what is important, what is doable, what's a
Yep.
reasonable time frame to get things done. But I think the nice part about our team and our business, and to your point, the internal team we have that's working with those underwriting groups is we're all doing it for a common cause. And
Mhm.
that's really to how do we deliver the best solution to the market? And it's not a personal thing. It's a look, I'm just giving you my experience and I'm going to tell you. And the other thing I like to say is that most decisions, when you get to a stopping point in your development in insurance, in my lifetime, have been binary. You can take A or B route, right?
Yeah.
And those A and Bs haven't changed in 20 or 30 years. The technology you use to solve them might have been evolved, but
Yeah.
you're usually still just making a decision between A and B. So if you can communicate that to people in a really normalized way and figure out how, again, to translate to them the impacts, telling them you can have A or B, but it's really hard to have both in a
Mhm.
platform for this and make them understand that. But hey, maybe there's an A1 and an A2. Those are the types of things we try and translate back
Yep.
for the people doing the work on the outside, like yourselves, or the people internally.
Yep.
And if we can do that, it goes a lot better.
We've talked about the advancement of technology and data, and obviously underwriting is key for you guys. What do you see that has really been bridging the gap in tools for underwriting with technology that you're excited about?
I mentioned it a little bit before, and I'm not trying to get on the AI bandwagon because I do not believe that AI is going to solve everything under the sun and it's the greatest thing ever. With that said, I do think I am interested and exciting for how it can help us, again, deliver better data faster to our
Mhm.
underwriters to make good decisions. And the other thing it can do for us as a program administrator is, and I thought it was really interesting when we got together with your team at your big event. The thing I was most interested in, it's kind of like the really boring blocking and tackling part, but the ability to, some of the things you guys are doing to use AI to help streamline some of the processes
Yeah.
that happen on the back end that our underwriters and our teams don't usually think about because that's sort of like
Yep.
making the sausage. No one really
Yep.
thinks about that. I do think that technology, if you can get more efficient that way, and you can do things again faster internally for your processes that are happening to that policy, you eliminate noise that tends to distract teams and
Mhm.
underwriting teams. Because if you make that more seamless, you've given your producing force and your ultimate insureds, you've eliminated a problem in the future for them. And that really is, I think, historically, you think back 10 years, 15 years
Mhm.
ago, I think a lot of vendors didn't do as good a job with just those core processes. It was like, man, your billing doesn't really work that well, or how you process endorsements don't work that well. And I remember like every time we would talk to a vendor, it was always, how do you handle out of sequence endorsements? 12 different answers on how you should do it. I think today a lot of those discussions get smoothed over and sometimes almost forgotten because
Mhm.
the technology has gotten so much better for that. And I think what I saw you guys doing with how can we turbocharge that with
Yep.
some AI enabled tools, that gets pretty neat to me. Now, with that being said, there are some things that people want to take that to an extreme I don't like. And if I had my way, we would never introduce. And don't take this the wrong way, but I'm not a huge fan of like chat bots and some of the other automated things that are out there technology wise. I know I'm probably biased, but my personal opinion when I get on the phone or when I get on a website for my own stuff and it wants to throw me to a, hey, go to this text box or a chat box or I'm on the phone, I'll hit zero until I get a human all
Yep.
day long. Because
Yep.
if I'm calling or inquiring and I haven't been able to follow the normal self-help
Yep.
things that are out there, I probably have a real problem. And so I want to talk to a real person. I don't want to go through that
Mhm.
pathway of where technology is going to help me. And actually, what it does is slows me down, wastes my time, and gives me a bad experience. We don't want that for our customers. And we say that a
Right.
lot. Our customers should, whether they're brokers or whether they're insureds, they ought to have a really good experience with us and they ought to be able to talk to somebody that actually understands and can answer their question and their problem. And the way you eliminate those calls from coming in, the way you minimize it is if you do a much better job the first time you actually do that process and handle that policy. It's amazing when you do that, how many fewer calls you get that come in, because a lot of times those calls that come in are something where this just looks wrong, and it's because you actually did it wrong the first time.
Well, and I think that's where the technology that we were showing, obviously, at our event from an AI and a Gen AI standpoint really drives that efficiencies in the processes, but it also creates some quality and consistency. Because if you're summarizing information, you know that you're going to be able to get probably a better quality than if you try to do it manually, as an example, and try to kind of think through it. But the real opportunity here, I think, especially in the niche that you guys are in, is when you drive those operational efficiencies, what that ultimately can do is drive down the expense ratios. And
I
it
hope
can,
so. Hopefully it makes you
yeah,
guys cheaper. No, just kidding.
yeah, it makes pricing so much more competitive in the marketplace then.
For us, it's funny. Maybe we have a little bit of a warped view of it. We never really think about it as removing people or reducing the expense. What we think about it is it gives us more leverage. We
Yeah.
can do more with the same folks. And actually, what
Yes.
it does, and I think
You
we've
can
been good
process more
about this,
volume.
and not just process, all those people that are doing that, what we love to do is move them up to the next level. I want somebody that touched and did these really difficult processes before. Those are my future BAs that are going
Yep.
to write these requirement documents, or these are
Yep.
the people that did that process for another unit and said, I
Yep.
understand this process. I can then take them to a completely different line of business. And I can say, look, don't get afraid because you don't understand all the vernacular that's associated with this risk we're writing over here. See through that and get to the point where you can then help them work on their process to get better. Because, like I said at the very beginning, we have 35 or 40 of these, right, that are out there. I
Yeah.
can't even count them anymore. And we have a limited staff. But if I can take those staff, they become more valuable to us and they can touch more things and their careers get better. They get
Yep.
exposure to different things. And then what happens is those people, it's amazing how we kind of put them into those positions. And then they're like, wow, I really like this line of business and I enjoyed working with this unit. And then they kind of will come to us later and say, I want to go work over here. I want to go be like an assistant underwriter or an underwriter. So I see a pathway. To me, that's the most exciting part, is
Yep.
that's where technology actually is working the way that in a utopian
Yep.
world it should. It's making those people more valuable. It's taking them out of some of those other tasks. They are able to leverage their knowledge and they're able to grow and get. That's one of the things for us because hiring talent is so hard.
Oh,
Man,
especially underwriting talent.
you got to be able to keep your talent growing and keep them engaged.
Yep.
And I visit some of our offices and I see the things these poor people are doing. And I'm like, I tell them all the time, you couldn't pay me to do what you do. That's a real job. That's real work. I have it easy. You guys do real hard work
Yep.
every single day. And that's where our job, and I take it personally, is we need to figure out how to make their lives better
Better.
because they're really smart and they're good and they can do more things. And when they're not able to do it, it's because I'm failing and my team's failing for not enabling them. So I think
Right.
that's where, to your point, I
Yep.
think that's where technology helps with that.
Exactly. So what's next for K2, do you think?
It is more of the same. People ask me a lot about it, and I think I can't remember if it was you or one of these other folks that likes to talk to me periodically, which is a very limited universe. There's not a lot of people that like to talk to me, but I think they were
Oh, I
asking,
love
hey,
talking with you, Matt.
you're private equity backed. What does that mean for K2 or whatever? And I think my answer was I could care less who owns us today. Yeah, the only thing I know is that we have the same management team, we have the same vision, and we've already exceeded everything we ever thought we could do at the very beginning of this business. We thought we were going to be really crazy if we could ever get to 500 million of premium, and now we're 4x of that. So for us, it's more of the same. All we want to do is, I think, enable the businesses that we have in the group today to continue to grow and kind of realize their vision. I think we've got a lot of businesses we've started in the last 2 years, 3 years, 4 years. They're just getting started. And so I think we're really excited about how do you enable them to keep growing. And I think for us, the other side of that coin is we get really excited about working with the carrier partners we've added to the platform. And we're trying to figure out how do we add more to the platform. It's really just kind of going out there and telling our story about this is what makes us different. This is what we believe in. And then finding those teams that are like, wow, that's a really neat story. I'd like to be part of that. Is it really true? And the best thing we can do is have them talk to the other folks that work for us in the units, and we'll expose them all day long and say, here's the list. Here's 30 cell phone numbers. Call any of these people. Ask them what it's like to work at K2 if we were able to do the things that we talked about doing. Did we let them be entrepreneurs? Did we let them really build their business model? Did we let them determine what those things are that they want to go target? And I think you'd find that, hopefully all 30 of them say, yeah, these guys, we all have our disagreements at times, but these guys, they actually do what they say. They're going to help me in these areas and they let me make the decisions in these areas. And they're trying to find ways to help fuel the growth. And for us, that's the honest answer. What's next for K2 is more the same. All we want to do is just keep doing what we're doing because we think that's the best model. We think we have the best model to take capacity and be a transformer and deliver it to the market. And we have the best underwriting talent to do that. And so for us, it's just that easy. It sounds
kind of
corny,
proven
but
it. You've kind of proven it
yeah,
reaching 2 billion in DWP.
yeah, that's what
3
we'd
billion's
like.
coming soon, I think.
I hope so. Despite what's happening to some of those rates out there, we would like to think that we can make that happen.
Yeah. So I always like to end the podcast with the same question for everybody. So if you could pick one word or phrase to describe the future of insurance, what would it be and why?
I think I sort of alluded to this throughout our chat. Faster. To me, that it's probably not the most exciting answer, but I think faster. And I think in all facets of the business, right? I think you
Yeah.
see faster ability to bring product to market. I think you see faster decisions because access to data has improved. I think you see faster adoption of technology. I think you see faster entrance into markets and faster exits as well. So you see much sharper spikes up and down about what's happening.
Yep.
18 months ago, 24 months ago, we were talking about this, the hard market that was good, the next hard market. Now, depending on the line of business, we're talking, I hear people all day long go, wow, we're in the throes of a soft market. That's
Yeah.
happening a lot faster in those underwriting cycles than it used to in the past. And I think personally, that is all because of the access to data and the ability to actually do something with it, analyze it, understand it, and react to it. And I think a lot of that is because technology enables it. So I think for me, faster. I think things are just going to get faster in the insurance business overall. I think you'll identify opportunities. I think those windows will close faster
Yeah.
and markets become normalized. And then you have to move on to some of the other things. I think that as I've gotten older too, I just think I'm always amazed at, I know I wasn't that smart when I started the business in, I think I was maybe 20 or something like that. But the young kids today that are coming into the business are also so much smarter that they're
Yeah.
accelerating that speed. They come out, they're just so much brighter and they think freer than we did when we were younger about how you can approach and solve a problem. To me, it's all about faster. I just think that insurance is just going to get faster and faster.
I love it. And we have to, given how risk is getting faster and faster emerging.
I agree. You have to identify it, you have to address it, and you have to figure out how you're going to, mitigate it, and you have to provide that service back, right? I think is
Yep.
the other thing is as you see new products in the market, not insurance products, but just overall come up, they create new and unique exposures that people don't understand. So you have to be faster to react to those.
Well, Matt, it's always fun having a conversation with you, and I'm looking forward to the next one. But thanks for today's conversation. Great insights.
Thank you for having me. I always appreciate the time to talk, and I look forward to seeing you again soon.
Same here. Thanks, Matt.
Thanks, Denise.
That's it for this week's episode of Future of Insurance Industry Leaders podcast. Subscribe to our market leading podcast series available wherever you get your podcast from. Thank you for listening and be sure to tune in the next time.